appreciate you taking time to spend part of your day with us. I think it will be very productive for you. It's a pleasure to welcome you to our real-time trading session for the NFP news release for November 2022, reflecting back on the past month, the report does, and that's coming up in just a few minutes now. We'll take a look at how the MAX trading system performs and live market price action. And we believe the real-time charts are a very helpful tool for anyone who is evaluating the system. And if you're considering learning this system, probably you're already aware, but classes begin on the 10th, so that's coming up next week. And the sooner you can get enrolled, the better, because I have quite a bit of preparatory material that I need to send you, and you can work through that before the first class session begins, and that'll get you off to a really good start in learning the system. If you like to trade the trends, whether it's stocks or Forex, futures such as YM or DAX or ES, or maybe gold, oil, other markets, you need a reliable system to help you with that, and MAX is the very best in trend following systems. So today you'll get to see our methods at work on the real-time charts. MAX courses will teach you how to use these trading methods and our proprietary indicators and provide you with everything that you need. Classes are available anytime by video, but they begin formally. The class webinars do on the 10th of this month. And along with the class, you get full support, access to your instructor for any questions you might have. And you also get at least 2, sometimes 3, sometimes 4 skill building workshops in addition to the classes every month, year round. And so you can just keep getting more and more skillful with your trading as the year goes along. And I'll provide links in the chat for those of you who would like to get enrolled. Of course, we don't know what will happen in today's news release. Even if we did know the numbers in advance, it still would not be clear how the market will react. Sometimes it's odd and confusing, but we hope to see some good price action today. If that's not the case, then probably Eusebio will choose to force a trade. That just means that he may decide to enter a trade that a MAX trader would normally never take, would just ignore it. In other words, it's a trade that our system tells us is too risky. It does not meet the requirements of our entry rules, but the trade is entered anyway, or forced, just so that you can get a look at how MAX methods protect the account and take advantage even of weak price action. We'd like you to please remember this is not a trading room, and we are not providing trade calls today, so nothing that you see or hear during this webinar should be taken as trading advice or as an entry or exit recommendation. All of it is for educational purposes only. Eusebio has been preparing and is ready to take us into the charts for this session. Some of you are meeting Eusebio for the first time. You're going to enjoy watching him trade. You'll quickly discover that he is very skilled, very knowledgeable. He's a great coach, and he really enjoys helping other people. So you're in for a good experience. Listen, watch carefully, ask questions anytime using the GoToWebinar question panel. We'll try to make sure that every question gets answered during today's session. I think that's enough preliminaries for Eusebio, but I do want to thank you for sharing your time and expertise with us today, and I'll pass the microphone along to you.
Thank you very much, Craig. Hello, everyone. Nice to see you today for this non-farm payroll session, open house session. I hope you are all fine. And before starting, let's make a quick audio and video check. Do you see my screen and do you hear me well? Oh, Dan, you always anticipate my questions. because you are very used to them. So, but anyway, thank you very much. So I would really appreciate if you can type a yes or a Y in the question panel of GoToWebinar, just to be sure that everything is okay. Okay. Thanks, RG, Richard. Yes, all okay. Okay, thank you very much. I really appreciate. So we have the non-farm payroll report now in 4 minutes and a few seconds. And for the US dollar, but also the employment report, the corresponding employment report for the CAD. And as you know, the non-farm payroll is always a very complex report to analyze, and we have to combine the employment change with the unemployment rate. And both must be in agreement, with a big surprise to see some movement in many pairs, not only the pairs with the US dollar or with the CAD, but also the other pairs. What is a big surprise? A big surprise is a big deviation, positive or negative. And a deviation is always a difference between the release data and the forecast. For the non-farm payroll, we have a forecast of 197K and the unemployment rate 3.6%. And here I have written my limits to have a big deviation, positive or negative. So this means that if we have a non-farm data larger than 260K and an unemployment rate less than 3.5%, we have a big positive deviation, and we can expect usually the US dollar to strengthen. If, on the contrary, we see employment change less than 130K with an unemployment rate larger than 3.7%, then this is a big negative surprise, and we should see the US dollar weakening. And similar numbers for the Canadian employment and change and unemployment rate. So, and so we never know in advance what we will have. And if these conditions are not fulfilled, so this means that the non-farm payroll will not provide us with tradable situation. So, and so Craig has explained what I will do in such a case. Now let's take out these notes out of the screen, and let's wait for the report to be handled now in 2 minutes. And today I will use the max primer level of the max, so the max primer chart. I have chosen 6 pairs involving, of course, the US dollar and the CAD, so the pound US dollar, the euro US dollar, the pound CAD, the US dollar CAD. And I have added also the euro CAD and so the pound yen, because the pound yen is often one of the most volatile pair. We begin to see some volatility increasing in the chart on the present bar. This is something which is typical with the non-farm payroll, but it's always better to wait for the report to be released and then observe what will happen. And if we see a big surprise, let's suppose, for example, a big positive surprise, what we see usually is a big spike in the direction of the strength of the currency, then a retracement, which can take several minutes, sometimes in rare cases several hours, and then the fundamental movement, which is the movement we can consider to trade. So we never trade the initial spike because the price is moving too fast. And usually the spike is in the direction of the released report. So hello, Francis and Randy. So I see you on the private chat room of the Max. Now, in 30 seconds, we have the report, and I will check on the calendar what the numbers are, and we will have to wait. And furthermore, we never need to rush because we have to wait for some retracement if necessary. And 2 minutes after the release of the non-farm payroll, we have the release also of previous month's revision. So we have plenty of time, and this session will last 2 hours. Okay, we see now the market. Let's observe the numbers now. Let's wait for the number in the calendar. The calendar takes some time to update. But we can see that we have a first spike to the downside on a pair like the pound US dollar, like the euro US dollar. Okay, so, And I will update, so here, the number, but on another monitor, just to not hide the chart. So for the CAD, we have 100, oh, a big number. So 103.8.3K. For the unemployment rate, we have 4.2. Unfortunately, this will not be enough. Now, for the US dollar, we have a 261K, so which is large enough for the US dollar to be positive, but we need to wait for the unemployment rate, which will be 3.7%. Oh, this is not good. 3.7%. It is larger than the forecast, and for the average hourly earning, we have 0.4%. So as we can see now on my notes, and I will update my notes because I keep them every month. So we can see that the non-farm employment change is more than expected. So 260, which was my forecast, against 261. So the first condition is fulfilled, but the second condition is not fulfilled because we should have seen an unemployment rate less than 3.5, and we have a worse unemployment change. So no good trade opportunity for the US dollar with the non-farm payroll. For the CAD, we have a deviation which is large enough, 108K instead of 15K, and the unemployment rate is a little bit too large. Too large. So if it would have been 0.1% less, we would have had a good condition for the CAD. So we have no good condition for the two pairs. We don't have agreement between the two numbers, the employment change and the unemployment rate. So unfortunately, again, and this has happened many times during these two last months, so the employment change does not provide a good number for a nice trade opportunity. And so consequently, what I will do is, as soon as we will see in a few minutes the volatility slowing down, so I will force a trade, let's say on one US dollar pair, the pound US dollar or the euro US dollar, probably the pound US dollar, and one in a CAD pair. So I will choose on the right moment, so either the pound CAD, the US dollar CAD, or the euro CAD. So unfortunately, no good opportunity with the numbers. Now let me check what is happening in terms of strengths of the currency themselves. So the commodities and the antipodeans currency, so the Aussie, the Kiwi, the CAD are the strongest currency. The safe havens, so the yen, the Swiss, the US dollar are mixed to weak, and the euro and the pound are pretty much weak. So, but the US dollar is weaker. So let's wait and see for an entry setup, which is not a valid entry setup. So under the circumstances we are seeing for now, we don't have a good trade opportunity situation. So I will force a trade and will illustrate how the trade risk management approach we use within the MAX is working in order to minimize at best the risk we take on a trade while we are in the trade. But let's wait for the bar to complete, and let's see if we will see some strengths anyway in the US dollar and some strengths in the pound count, which seems to be the case. The CAD seems much more interesting than the US dollar. You can see on the US dollar, so the euro US dollar or the pound US dollar, so the retracement has been immediately very fast, immediately after the news release, after the first spike. And the spike was not a very big spike. It was a spike of around less than 50 pips. And you can see on the bar, that the red bar, that we have a long tail showing that the retracement has started almost immediately. And so the market is changing its way. They consider that the numbers are not good enough. So perhaps the US dollar CAD could be also a good opportunity, but we need to wait for a valid setup. Yeah, thank you, Gianluca, for the number, 261K, that's correct, and Rami for the revision. Hello, Ron, welcome. So usually our session lasts 2 hours. I don't know if I will be able to make 2 hours today. Let me just explain quickly why. I have every day a working workout. I go to work every day, minimum 1 hour, sometimes 2 hours or more during the weekend. But sometimes ago, I stupidly fell down and I have been injured on my left side of the chest, the back and the leg. And so the back and the leg are still very, very painful. And it's difficult for me to find a comfortable situation so on my seat. And so if I can sustain the 2 hours, I will do it. Otherwise, I will shorten the session. So we begin to see much more important retracement in the pound US dollar and in the pound CAD and in the euro US dollar. This shows that the US dollar is not strengthening, and it is even the weakest currency. And so when I have started my day today observing the market, my bias for the pound US dollar was long. And so consequently, it will remain long. Long with the euro US dollar, short with the pound CAD, short with the US dollar CAD, long with the pound yen, and short with the euro CAD. And so these two employment reports for the US dollar and the Canadian dollar do not change my daily bias for this pair. And the daily bias are made from the analysis of the global context. And by global context, I mean the decisions of the central banks. And we have seen Wednesday a very important one with the Fed. And if you have observed the market carefully, so the Fed has increased its interest rate by 75 basis points as expected. And in a first step, the US dollar has begun to weaken because the market has considered that the statement was dovish. But then half an hour later, Powell has made his press conference, and he has been, on the contrary, hawkish. And this has reversed the strength of the US dollar. And so this shows that these kind of reports are not always easy to interpret. For an interest rates announcement by a central bank, you have always to wait also for the press conference to see if the tone used during the press conference will confirm the statement or not. And with the non-farm payroll, we have an even more complex situation to analyze. But let's see when this volatility will begin to slow down. I have added also the pound yen in the list of the pairs I'm observing today, because I like to trade the pound yen. The pound yen is often one of the most volatile pair. And so this is why I have chosen this pair. We provide, let me show you that while we are waiting, let me show you something. Here we have the calendar where I have taken my numbers. So it's Forex Factory, which is one of the good economical calendar. There are many other we can use, FX Street, my FX book, and many other calendars which have a good quality. But I like Forex Factory because it is presented in a very readable form. But then on our website, there is a special page which is named News Watch List, and the link is www.maxtrading.com/newswatch. I will put the link in the chat panel of GoToWebinar. So, because these are information you can access for free. And every week we update this page with geopolitical events, with a simplified calendar. We consider only the news which may provide nice movement if we have a big surprise. And then we provide the best trending pairs, and you can see that the pound yen is often one of the best trending pairs, and then a list of proposed pair for each day of the week when we compare the top pair list with the news calendar. And so you can see that we have the pound US dollar, the euro US dollar, the pound yen, the pound CAD. I have ignored the second choice, and I have added the euro CAD due to the news today on the CAD, because of course the Mac trading system is a trend following system, and if we want to use a trend following system, better to exploit and to trade trending pairs. It makes no sense to trade a pair like the Aussie Kiwi, which is a pair which does not move a lot. When it moves 50 pips a day, it's a good movement, but we are looking for larger trends. And the trends we are living nowadays are way, way smaller than a few years ago, 5 to 10 years ago. And so over years, after the subprime crisis in 2008 and its consequences the following year, so we have seen a progressive decrease in the range of the trends we can observe. And for some months now, we see again an increase in the volatility and the size of the range, so increasing progressively. So this is just how we choose our pair, and you increase your odds to have good trade if you choose the best trending pair. And so this is a free information you can access at any moment, and if you want to be informed when the information is updated, you can just put your name, your email address, and every week when it will be updated on the Saturday or the Sunday, you will be informed and you can access that page for free. So now let's see what is happening now. The US dollar is still the weakest currency. The euro US dollar may be interesting. So we can see that we had also a spike to the upside, showing the fact that the market is not believing in the fact that the US dollar can strengthen. So I will wait and look for a long entry setup on the euro US dollar and on the pound US dollar. And I will wait for a short entry setup on the pound CAD, the US dollar CAD, and a long one on the pound yen. Yeah, but not very interesting for the moment, and a short one on the euro CAD. But we need to wait for the appropriate conditions. So, if you have, in the meantime, questions, so feel free to put them in the question panel, and Craig and myself will be glad to answer your questions. Now, what is an entry setup? An entry setup is a specific pattern we observe at the beginning of a new trend or later in the trend. Because if I take, for example, a pair like, let's take the pound CAD here, we have in all this area a downtrend. Okay, a downtrend. The beginning of the downtrend is in all this area, and later we are in the middle of the trend. And so an entry pattern is a specific price pattern, either at the beginning of the trend or later in the middle of the trend. And we have several of these patterns because, of course, a movement inside a trend may start under different conditions. And these different conditions induce a pattern, a price pattern. Now, once we pinpoint an entry pattern, so this is not enough to say that we have a good entry setup. We have some conditions to fulfill. For example, if I would like to consider this candle, and I will draw a green vertical line, which is our conventional notes to illustrate a valid entry setup, we have to check several conditions. Technical conditions, and the technical conditions are based on our indicators on the chart. And I can tell you that this setup technically is a valid setup. It is not a setup we can take because the pullback has not been deep enough after the news release, but I will force the trade so here. And it is in agreement with my global context, so for the pound CAD to go short. So the setup is valid on a technical point of view, valid on global context overview, not valid in terms of the news release. So this is not a trade we have to take, but I will force the trade if the price moves consequently. So a price pattern is always the basic entity for our entry setup. Once the entry setup is defined, we have to consider where to make our entry level and where to place our stop loss. A stop loss is always required in order to control not only the risk in terms of pips, but also the financial risk. And because any trade involves a risk, of course, the trade can be a losing trade. And so here I will consider an entry level here at that level on this level, and I will place my stop loss. So it is a rather large stop loss, so due to the fact that this pullback has not been deep enough. After a news release, we want to see a pullback deep enough. So, and sometimes it can take several hours. But anyway, because I will force the trade, so I will not wait for such a deeper pullback if the price follows through and hits my entry level, and I will place my stop loss somewhere in this area. So giving us a stop loss size of around 38 pips plus the spread, which is usually 1 pip, so 39 pips. And for that, I will use a tool we have, which is an expert advisor called the Max Trade Monitor, to handle the trade. So I will use a 1% risk just to illustrate the risk aspect. And so let's start the Max Trade Monitor. So here, and the Max Trade Monitor so is an EA which contains two boxes. A first box, which is a box with button, buy and sell. And so I will set my stop loss on the place I have considered. So here the blue line. I will move now my blue line. I no longer need it. And so I will adjust my stop loss that way. And the stop loss size is indicated so here in the data panel. And in the data panel, so we have the two columns, a global and a symbol column. The symbol column will give, if the trade is opened, the results or some numbers about the trade. And the global column will represent the total numbers, the aggregated numbers, if we handle several trades simultaneously. In this data, two lines are extremely important. The ESL result, which is the result of the trade should the price hits the stop loss, and the XXX profit, which is the potential profit we make in the case we close the trade at any moment along the day. And so as long as the price will move when the trade will be open, so this number will vary with the price. It will increase or decrease depending if the price moves in favor of the trade or against the trade. So these are extremely important numbers to handle more in a more tuned way, so the trade. But I see on my other monitors where I also follow these pairs that the pound US dollar may present a possible opportunity. And so indeed, this one is also a possible opportunity. just to show the trade risk management aspect. Okay, so it's not a trade opportunity, and so the price is moving too fast. I don't like to chase the price, so let's wait for some pullbacks, and I will set my stop loss in this area. So we have plenty of time, so no need to rush. The euro-US dollar is also moving upwards, so in the direction of the US dollar weakening due to disappointing numbers in the non-farm payroll. The US dollar CAD has not produced a pullback yet, so which is not a surprise because the CAD report was a bit better than the US dollar report. And so this is the kind of movement we may sometimes miss because we never see such, in such a movement, we never see a valid entry setup. So, but we just need to be patient. So let's focus on the pound US dollar and the pound CAD. So I will minimize these for the chart in such a way to title the chart and to better see what is happening on these pairs. Now this is something interesting. In the pound CAD, the pullback has been deep enough. For us, deep enough means that the price must reach our yellow and orange line. So here, which is a very specific indicator we have developed for the MAX, which indicate the movements inside a trend. So we are in a downtrend and we have different movement inside the trend. And depending on the depth of the pullback, so our entry setup will be different, the entry level will be different, and so we will have to reevaluate, if necessary, our stop loss and our entry level. So this bar will close in 1 minute approximately. Now, when we trade with the MAX, we have several levels of the MAX primer, the MAX standard, as we have presented Wednesday and last Saturday. But we have two other levels of the MAX Advanced and the MAX SAM. And more specifically with the MAX SAM, we use another way to represent the price movement. The chart you are seeing are what we call time bar charts. Each bar lasts 5 minutes because we are using the 5-minute time frame. But we can use other price representation like the Renko bar, like the constant range bar chart, like the tick bar chart, and so on and so on. And we use one of them, or even two of them. And with these price representation, we may have sometimes earlier entry setup. So we have better entry setup, we have better exit setup, we can catch much more details in the price action itself. And so this helps to fine-tune our entries and exit. But I will not illustrate them today. You can see that with the euro, the pound US dollar, should I have been fast enough to make my entry, the price has moved so almost 25 pips in our favor. And this sometimes happens. If we are not fast enough, sometimes we may miss a movement. And when we miss a movement, so when we miss the initial entry, we have never to try to chase the price. We wait for the next setup, simply. It's as simple as that. Because one important aspect in a good trade is to have a good entry. If you have a good entry, half of your trade is made. A valid trade, whether it is profitable or it is a losing trade, start with a good entry. And so you have to be patient, like a sniper, to have the right entry level. If you make your entry too late, so you create in your own trade a handicap, and this handicap may change the issue of the trade. And so if you miss your target, so wait for the next one. Oh, we are seeing a fast reaction now against the US dollar. And this can be also what could happen with the pound CAD. I'm not sure yet. And so if the trend reverses on the pound CAD, I will consider a long trade, of course. Look, the pound US dollar. Oh. And so this is a typical example when the numbers seems good, but the market is not interpreting these numbers as good enough. So despite a good employment change, so the price moves in the opposite direction. Because the second ingredient for the non-farm payroll, so the unemployment rate, were not good enough. And so you have always to combine these two news to analyze more correctly the non-farm payroll report. Okay, it seems that we want to have a trend reversal in the pound CAD too. Now, in the presentation I have made Wednesday and last Saturday, I have explained that the trend is given not only with the global context, but also technically with the slope bias, which is the green and red line on the chart, and the blue and orange line, which is called the fast bias, is used to validate, or let me check here if we don't have yeah, you think that we have here possibly a good setup, technical good setup. My stop loss is a bit large, so here, and let's make an entry here. So I will force the trade. This is not a trade to take, but I will simply force the trade. Okay. So this trade may end as a losing trade, by the way, simply because it doesn't fulfill all the conditions I was looking for. But I was explaining that this fast bias is used not only to validate the pattern at the beginning of a new trend, but it is also used in combination with the slow bias in some circumstances to anticipate a trend reversal. And this is exactly what is happening. So here we see all the ingredient for a trend reversal. And so this is why I have considered a long trade. But of course, this is not a trade in the direction of my global context analysis. I just want to show you how we handle the risk when we are in a trade. And so if you observe now in the bound card panel with the symbol column, I have chosen a risk of 1%, and you can see that the risk is a little less than 1% because when we open the trade, the size of the trade is always rounded off by default, and I can show you the terminal panel. So you see here on the pound card, so the trade manager has opened a trade size of 34 microlot, and we consider that this trade is made of 2 units, each unit having a size of 17 microlots in this case, in order to minimize or to control the risk, the maximum risk to 1%, 1% of the trading account. This is the case if the price reverses and comes and hits the stop loss, which has a size of approximately, we can see here, 32 pips, which was indicated here when the trade has been open. Now, should the price moves in our favor, so continue to move upward, I will consider to take a profit here if the price moves some distance in my favor. So the stop loss was 32 pips. If the price moves by half of the size of the stop loss, so let's say 16 plus 1, 17 pips, here at 152,577, 152,577, let's say in this area. So if the price reaches or exceeds this level here, I will close half of my trade. This is what I call not an exit setup, but a discretionary situation. So a discretionary situation is a situation when we can be a little more flexible with our rules. And by the way, for those of you, for the Max member who are in the room, if you observe your Max standard chart, you will see that this level especially is a very special level where banking some profit if the price rejects that level is a good exit setup opportunity. So the price is right on dynamic support and resistance level, but we have to wait for the close of the bar in order to do that. And so I will consider to close half of my trade, making an MX using the MX button if the price reaches that level. And I will adjust my stop loss, and you will see how this, if this happens, you will see how this will reduce the risk on the trade. So if the price is kind enough with me to achieve that level, so you will see that effect. And this will be an important part of the trade risk management, being able to catch a partial profit and to be able to tighten the stop loss will contribute greatly to the reduction of the risk on the trade. And in some circumstances, very often, depending on the type of exit we do for our first profit taking, so the trade will become risk-free. And you see that sometimes the distance to achieve this profit level is just a few pips, and to move by a few pips is sometimes very difficult. The euro-US dollar would have been a good trade, so the movement was around 40 pips for a stop loss of 33 pips. This would have been a good movement. Just to illustrate, but not a valid trade. The trade on the pound CAD is also not a valid trade, so remember that. A valid trade is not necessarily a trade producing a profit. It's a trade fulfilling all the conditions. And so it can end with a loss. A good trade is not a profitable trade. A good trade is a trade following all the rules. A bad trade is a trade violating the rules. And what is important on the long run is your statistical results. If you have a trading system like the MAX trading system, which has a winning rate between 70 and 75% when we ignore the global context, so this means that on the long run, if you make, for example, 100 trades, you should expect to have between 70 and 75 winning trade and around 20 losing trade, and the rest of the trade will be break-even trade. So, but usually there is, I have always found that a paradox. Many traders consider that if we have such a high success rate, so let's pay attention here. So if the price exceeds that level, I will make an, so MX. I make an MX. So if we observe on the terminal panel now, view terminal, you see that the trade size has been reduced, and the account history, you will see the closed unit with the corresponding profit. Okay. Now let's observe what is happening with the max trade monitor. By simply taking that profit, I have reduced my risk to minus 0.2%. This means that in the worst case scenario, if the price reverses violently and hits my initial stop loss, so here in this case, I will lose only 0.2%, which is a very small loss, easily recovered with a profitable trade. But making that partial exit is not the only action I can do. We always indicate an exit setup with a magenta vertical line. We have also the opportunity to tighten our stop loss. And I observe that, where is my, the line, the blue line to adjust the stop loss is not appearing yet, because we need to see the price closing above this red line, which appears when the price is in a downtrend. But here I can use my ETF line, which are these yellow and orange line too, and the Mo line, which is this yellow moving average, to adjust the stop loss. And we can see that the stop loss size now has grown to 55 pips approximately. So I have certainly flexibility to tighten my stop loss, and I will tighten my stop loss, so in this area, somewhere in this area. And simply by reducing that stop loss, now the trade risk changed completely. I am still at 37 pips from my present price. Okay. Oh, you are not seeing the number, the MTM. Oh, sorry. Oh, I know why. Yeah, I'm sorry for that. And thanks to mention, Dan. Yeah, because the left side of the screen is reserved for the chat area. But anyway, let's now you see the number. So now my minimum result of the trade will be plus 0.04%. This will be the result of the trade should the price hits my adjusted stop loss. If I close the trade now, I'm sure to make more than 0.5% profit. So 1/2 R because my risk was 1%. But let's see what the price will do. I consider that we are now in an uptrend with the pound CAD, and you can see that the slow bus has turned to green. So our anticipation of the trend reversal was correct. And this was shown by the structure, the slow bias and the fast bias were showing. This is what we call an anticipated trend reversal. So, and as long as the price will move in our favor, I will continue to adjust my stop loss in order to lock more profit as the minimum profit. So now, of course, one way to close the trade is also to close the trade when you have achieved a total profit which is large enough. If you decide that 1% or 2% is enough for the day, and with the risk of 1% making a profit of 1% or 2% is a nice profit. So you can also decide to close your trade at that level and close your day. Personally, because the MAX is a trend following system, I prefer to try to stay in the movement as much as possible in order to catch the profit, the larger profit when we have indeed a good trend. Because when we have a good trend, which happens between 2 and 4 times a week for each of these trending pairs, so we can use the scaling technique. And with the scaling technique, we increase, importantly, the profit we can extract from the trend. Hayden is asking, hello Hayden, I read your question. You specify that you force this trade with two slow bias against us. Can you confirm that in your normal trading you never trade against the slow bias unless there was a fast bias divergence? Yeah, indeed, and you have nailed it correctly, Hayden. So the trend reversal was pinpointed by a divergence between the price and the fast bias. But there is also, remember, there was a condition with the slow bias, and the slow bias was in the appropriate or under the appropriate condition to pinpoint that reversal or that divergence anticipating the trend reversal. Otherwise, you are completely right. If we have no indication that the trend can reverse, we never go against the slow bias. Okay? How are you doing in your trade, Dan? Are you doing good trade as you are used to? What a pity to have missed the pound US dollar. Don't you agree? So 60 pips movement for the moment now. You have closed the Euro Aussie, opened 402, close 15.59, a trend at approximately 220 pips. Good, good, Francis. Ah, then you are trading the Dow Jones. Okay. Yeah, we have also very, very nice movement in the stock indices. I suppose that most of your trades are short trades, perhaps. Yeah, now this bar will close in 20 seconds, approximately. Let's see if it will close above the pink line to see the blue line appearing, because the blue line is really a very, very useful line to adjust our stop. You see here on the pound US dollar, it begins to appear in this area, but we are not in the pound US dollar. An entry setup is appearing also in the US dollar CAD, but because of the explanation I have to give, so I will stay on the pound CAD only. And so this bar has closed. The price to the distance from the price to the stop loss is around where it is 35 pips, so which is a bit large. So I can still tighten a little more my stop loss by around 5 pips. So here, and you can see that now I'm looking a little more profits. And this is something, in fact, you almost never see in tools helping you to handle your trade. Usually, a trade manager will ask you to provide your stop loss size, to provide target profit, one or several target profits, with the reward to risk ratio, the corresponding reward to risk ratio. And if the price hits your target profit, you realize that reward to risk ratio, but you never know how the risk is evolving along the trade. So if you tighten your stop loss, you don't know what is your remaining risk. And it's extremely rare in such tools to see how the risk evolve along the trade. Personally, I always ignore my profits. I almost always ignore my potential profit, and I focus only on the risk aspect. Remember what Chris has explained during our presentation. What is the essence of trading? The essence of trading is always to assess a risk when a trade opportunity presents, and you have to decide if you take that risk or not. If you decide to take that risk, you open your trade, and then your first priority as a trader is to control that risk. In the first step, you have to minimize that risk, and this is where banking a partial profit and adjusting your stop loss, so a combination of these two types of action will play an important role to help decrease that risk until the trade becomes a risk-free trade. In this case, my trade is a risk-free trade. And once the trade is a risk-free trade, then we can focus on the way to optimize the result of the trade. And this is when the scaling technique will apply, and in combination with the partial profit taking and the stop loss adjustment. And in this way, you will increase and optimize your profits. Of course, because this is a forced trade, so out of question to make a scaling. So when the context is not clear enough, or when the conditions are not appropriate enough, so no scaling. So the trade will be a simple trade, an initial entry, a partial profit, and then the final exit. And for the final exit, we have two choices, either on the next exit setup. An exit setup is given by all our exit tools we have at our disposal. For example, the Store RSI, which is an oscillator, a momentum oscillator, but we have other tools in the market standard. We have a short-term exit setup and long-term exit setup. And on the long-term exit setup, which is the second choice, so we can wait for the trend to invalidate, or the trend to exhaust, or the trend to reverse. And so there is no best way to do. You can choose one way or the other way. And so here, let's try to stay in the trend as much as possible during this session. So we are now for 1 hour in this session. So we still have 1 hour at our disposal to see what the price will do. You can observe that in the pound US dollar, so here, this candle is a long bar. Remember what I have explained during the presentation. A long bar is a bar having a length, and the length is always measured from the high and the low. So we include the tail and the wicks, so the shadows of the candles, and its length should be 2 times or larger than the average length of the previous candles. We include also in the series of candles we consider all the other long bars. And this long bar is itself a nice opportunity to bank some profit. In this case, the length of this long bar was 43 pips. And usually I take a profit at 1/3 of that bar. So 1/3 of 43 is 14.4 pips. And so here at 14, in this area, you can see the next candle has made a retracement when creating this tail. So in this area, I would have banked some profit, so taking a profit of approximately 35 pips. And with the stop loss adjustment, the trade would have been in profit, in a profit. So, but now let's focus on the pound CAD. And indeed, the euro US dollar has made a similar movement than the pound US dollar. The US dollar CAD continue its downtrend with an entry setup which has appeared, but not a valid trade, unfortunately. And the other pair, so the pound yen moves upward like my expectation, and the euro CAD has reversed to the upside with a disappointing CAD. So. In this case, if this red candle, or if this candle, the present candle, closes as a red candle, it will be perhaps or not an exit setup. So we will have to wait for the close of this candle in around 3.5 minutes to see if it will be an exit setup, based, for example, on the Stochastic oscillator. A typical exit setup given by the Stochastic is what I have explained last week, last time, so a divergence, for example. But we have other exit setup pinpointed by the Stochastic. I will show one of them today if this happens. Let's move that horizontal line so away. And for either an entry setup or an exit setup, we always wait for the candle to close. There is one exception: we don't necessarily wait for the candle to close, is when we have a long bar. We have a special indicator telling us when a bar begin to be a long bar in real time, and so in such a case, so we can take a profit before the candle closes. And the momentum oscillator, the Stochastic here, but you can use any momentum oscillator like the RSI, like the stochastic, like the MACD. Always provide what I call short-term exit technique, so only for the MX. The candle will close in 1.5 minutes. So in the pound US dollar, it's becoming an exit setup. It's not a divergent in the Stochastic, but it's another pattern the price, the Stochastic is exhibiting. So not yet in the pound CAD. So in the Stochastic, this is what we call a top, an actionable big top, and an actionable big top is a short-term exit setup. And it will be most probably a valid exit setup, but it is a short-term. And so we will see where the price will be if this setup also appears in the pound CAD. But my choice is to try to stay in the trade as long as possible. So I'm not happy enough with this profit. I want to get more profit should the trend unfold. This is what we call being super greedy. I have no risk at all. I have even a minimum guaranteed profit. And so why not try to see if the price will make a better trend? Of course, what you can consider, if this candle closes, I don't think so, as an exit setup. No, it doesn't. Let me check carefully. No, it is not an exit setup, so we have to wait. In the store, in the pound US dollar, it was an exit setup. So But so let's suppose this candle would have been an exit setup. So this means that if I close the trade now on this exit setup, I would catch almost 0.5% profit on this trade, which is always better than 0.13%, 4 times better. But I'm not happy enough with that result because the MAX is a trend following system. And so if the price resumes the uptrend, I want to catch the trend at best. Of course, if this does not happen and the price continues to retrace and hit my stop loss, at least I'm guaranteed to make that small profit, or perhaps better if I have an opportunity to further fine-tune my stop loss. And this is, in fact, an important concept in the MAX. We have to accept the fact that not all the movement will be trends. But when it is a trend, we want to catch the entire trend, or almost the entire trend, because it's impossible, of course, to catch the lowest low and the highest high of a trend. But we can catch nice entry level and nice exit level. And with the MAX, we have extremely powerful tool to define when the trend is reversing with our slow bias, to define when the trend is exhausting, which is not exactly the same. The trend is exhausting when the price has made its movement and then begin to range without showing a trend reversal. And we know that a range sooner or later will be broken in one direction or in the opposite direction. But as long as the price is ranging, it's a waste of time to stay in this movement. And so we call that the trend exhaustion, and we have special exit technique for that. And we have also a special exit technique which is called the movement invalidation, which is not exactly a trend reversal, but it looks like a trend reversal, but which also provide a nice way to close the trade on a trend. And by the way, on the pound US dollar, we were under the conditions to close the entire trade in this level, but the price has not followed through enough. So we would still be in the trade. Otherwise, we are seeing a price structure which imposes us to close the trade, the entire trade, on an exit setup. But of course, the exit setup must. So an important point when we have an exit setup, okay, is we define an exit level. If the price follows through and hit that exit level, we make the exit. Otherwise, the exit is missed. We stay in the trade. But with this kind of price structure, we call that in a specific way in our MAX standard course, we know that on one of these exit setups, we will have to close the trade because the movement is approaching an exhaustion level or an extreme level due to the structure of the movement itself. I don't like Porsche, Craig. I have Italian roots, and so you can guess my preferred brand, auto brand. Don't make me laugh too much because this emphasizes the pain I have in my leg. And of course, following the price that way requires also a lot of concentration, a lot of attention, a lot of patience. This is why I always write on my chart patience and discipline. These are the two mantras any MAX trader must apply. And it takes a lot of practice to develop these two skills because traders are impatient by nature. But when the trend is unfolding, this is when patience will be extremely essential. especially if you want to become not necessarily a professional trader, but a full-time trader. Of course, if you are a part-time trader, you have only a limited time to trade. This is something else. You need to use a different approach. But as a trend follower, you have to be patient to catch the trend. This is the aim of trend trading. Under normal circumstances in the market, let me check on my standard chart I have on another monitor, so the pound card. Yeah, if this candle closes as a blue candle, it could be, it is not the case in this trade, it could be a scaling entry setup. So but the condition for a scaling is not appropriate today. The conditions are not fulfilled. So the non-farm payroll and the employment report for Canadian dollar do not provide the appropriate condition for a trend. So no scaling. The scaling technique is a very powerful technique to improve, to increase, importantly, the profit we extract from a trend, but the scaling technique must be applied very, very carefully. And you can see that in this type of panel, when you make a scaling, your risk increases, so correspondingly. And in this case of the pound euro dollar, the price would have followed through, you can see here, and the exit would have been made. So a first partial profit here with around 36 pips, and the second exit with around 46 pips approximately. So, so by adding the two numbers, you can have an idea of the trade result. And when you compare to the stop loss size, so this would have provided probably a 2-to-1 reward to risk ratio, or 1-to-1 reward to risk ratio, a little more than 1-to-1. Let's check carefully. So 36 and 46, 82. 82 divided by 2, 41, and 41 divided by 33. So this represents 1.3, 1.2, 1.3 R, or to 1. Not a bad trade, but I repeat again, not a valid trade, just to illustrate the trade risk management. So this red candle now is an exit setup, short-term exit setup, but as I have explained, I decide to stay in the trade as much as possible. The price to pay for that is possibly to limit my profit to minimum 0.13%, which would not be a surprise because we don't have the condition for good trends today. If I tighten just a little bit my stop loss, you see the risk is, there is no risk, but the minimum profit now is 0.13%. If I tighten just a little bit my stop loss by 1 or 2 pips, my minimum profit increases. And this is a very, very useful information. When I see such green number, I'm completely relaxed on my trade. And so unfortunately, there are few trade managers showing how your risk evolving and how your minimum profit is evolving along the trade. And for me, this is a key information to handle the trade in a very objective way. And this helps a lot to eliminate many of the psychological aspect or bias in trading, the fear of having a losing trade, fear for the trade to go crazy. When the number becomes green, you have nothing to lose. And remember, in the trading world, we have 5 types of results. Just to make it simpler, you may have a big loss, you may have a small loss, you may be break-even, you may have a small profit, you may have a big profit. By controlling your risk with a stop loss and with a portion of your trading account you allocate to the trade, so you eliminate necessarily the big losses. And so you will be left with small losses, break-even, small profit, and big profit. But to get the big profit, you need to develop that patience and discipline skills to stay in the trend as long as possible if the trend unfolds. And so you have to accept sometimes to catch a smaller profit than a profit which seems an interesting profit to catch at some point along your trade. And it's important to control your risk because this contributes to keep your losses small. And you know that when you have losing trade, especially losing streaks, then you are experiencing a drawdown. And depending on the depth of the drawdown, recovering your drawdown will become more or less difficult. If you have a drawdown of 10%, you will need a profit of 11% just to be break-even. If your drawdown is 20%, you will need a profit of 25%, or a series of profit amounting to 25% just to be break-even. If your drawdown is 50%, you need to double your account to recover from the drawdown. And the drawdown is always larger than we usually expect. And so this is also a red flag I can give you if you follow some traders in the trading world on some website like my FX book, for example, and similar website. I don't know if Zulu Trade still exists, but there are other websites. When you see a drawdown of 25% or more, this is a big, big, big red flag. Because the reality of the statistics is the following. If at some point you achieve a certain drawdown, let's say 25%, the probability that in the future you will achieve a double drawdown, so in this case 50%, is 1 or 100%. So this means that whatever the drawdown you achieve at some point in time, you must be sure that in the future your drawdown will double. And this can be proven mathematically with probabilities. And so when you see such a drawdown, 25% or more, for me this is a big, big red flag. My personal maximum drawdown I accept in my case, but this is my personal choice, is 15%. I don't accept a drawdown larger than 15%. And the nice things with the max advanced course is we can have a total control of the drawdown. And so we can predefine a maximum drawdown, let's say 15%. And if you apply correctly the procedure for the trade risk management, for the money management we exploit in the Max Advanced course, we are guaranteed to never exceed this 15% drawdown. And so this is a very powerful approach in the money management aspect. It is not a martingale, okay? But you can control completely your drawdown. Another very important aspect of discipline is what has happened here, or what is happening here in the pound candle. You see that with this red candle, the price has approached my stop loss. And there is a tendency by many traders to close their trade prematurely in order to try to catch a little more profit, to keep some profits. But for me, this is an error. As long as the price has not hit the stop loss, the trade is still opened. And so there is a chance that the price will resume the trend. And I have seen that situation many, many, many times. It's perfectly possible that the price will hit the stop loss, but I don't care because of this situation I have already explained so today. Okay? So patience and discipline. When you fix your rules, you have to follow your rule. You have to stick to your rules. And we can see some reversal happening in almost all the pairs I have mentioned previously. So not a good day to trade today with a non-farm payroll. You see how the reversal in the pound-dollar is nice. And I was explaining that we had to expect that because we were at an extreme level. We explained that in details in the standard course, and you see how the pullback, it's not a trend reversal yet, but it's a deep pullback. So with what we call it now, almost a movement invalidation. Probably the trade, yeah, the trade is closed. You can see now the ESL result has been set to 0. The XXX profit is equal to the minimum guaranteed profit. And so the trade is closed. And so when we trade when we close the trade, whatever the result of the trade, we forget this trade and we wait for the next opportunity to trade. Never, never, ever open a new trade because of the result of your previous trade. So this is what we call trend revenge trading. Never revenge trade. Once a trade is closed, whatever its result, a profit or a loss, forget it and wait patiently with patience and discipline for the next entry setup if the global context is still favorable for a trade. Once we have closed the trade, we need to erase these numbers in our max trade monitor. And for that, we have this configuration button RP, the reset panel. If we click on that button, so all the numbers will be reset to 0 in such a way that when we will have to open the next trade, the max trade monitor will calculate automatically the size of the trade depending on the new balance in our account. So if we do not reset the numbers, this means that if we reset the numbers, so we apply the compounding process, we compound our results. If we do not do that, so the initial balance of the day will be still used to define the new trade size. And so we don't apply the compounding process in this case. So you have the choice. Okay, we are at the end of this trade. Any questions about what I have presented today? Any questions or comments? No questions? Everything has been clear enough? You see, even when the market conditions are not really appropriate for a trade, if you pay a strict attention to the rules and to the way the risk is evolving, even under difficult conditions, you can still catch some profits, but you need to be extremely accurate, okay? Extremely accurate. And this is especially true in small time frames. You can use the M1, you can use the M5, the M15. The M15 is a little more comfortable than the M5, of course, because you have more time to analyze your situations. You can use the M30. And of course, if you don't have time to be an intraday trader, you can use higher time frames, the 4 hour, the 1 hour, any time frame in between, the 4 hour, the daily time frame. So you will have much more time to analyze the situations, but you will still need to apply the rules correctly. So one question which is often asked is, what is the best time frame to trade? There is no best time frame to trade. You can trade any time frame. The best time frame to trade is the time frame which suits your own time schedule or your own time constraints. This is especially true if you have a normal job, a 9-to-5 job, and if you don't have the opportunity to trade in your workplace or in your office. If you are your own boss, there is no problem. But if you are not your own boss, so this is not a good situation to trade on your workplace. So a higher time frame is more suitable. And so you have to decide your time frame, but you apply exactly the same concept. But if you want to become an intraday trader with a small time frame, because this is when the opportunities are present more frequently, of course, when you have so a lot of opportunity every day, you need to stay focused on what is happening on your chart. So. And so this pullback we have seen, which has been deep enough to hit the stop loss, so is due to the volatility which is still present in the market. We still have a high volatility. How can we recognize a high volatility when we observe a chart? When you observe, for example, the pound US dollar here, we have all these candles, okay, having some tails, some wicks. And when we have large tails and or large wicks, this is an indication of a high level of volatility, which is also what we are seeing partly with the pound CAD. And so this is one of the tips to recognize a high level of volatility. And when you have such a high level of volatility, tightening your stop loss too much is dangerous, because this is when the volatility can create a pullback against you, hitting your stop loss. This is why using a too tight stop loss is never a good idea. Of course, when you use a tight stop loss and the price moves in your favor, you can create a larger reward to risk ratio in your trade. But if you forget that sometimes the price can be extremely volatile, you can make also more losing trades. Don't forget an important concept in trading when you calculate the expectancy of your trading system. So what is the expectancy? The expectancy is the average result you can get from your trading system. Hopefully a profit. So, and it is calculated by the following formula: average profit times the probability of winning trade minus the average loss times the probability of a losing trade. So, and you can evaluate that expectancy if you have a sample of trade, 100, 200 trade, you will have a good idea of your expectancy in the way you apply your trading system. But whenever you change the rules for the stop loss adjustment, so you will modify the probability of a winning trade, the probability of a losing trade, and your average profit and average loss, and so your expectancy can change. And so this is why you have to pay extremely attention very carefully in the way to place your initial stop loss and to adjust your stop loss. You have to take into account the level of the volatility you are experiencing when you are in a trade. And so as long as your trade is risk-free, don't hesitate to keep a stop loss a little larger than you would like. Just, for example, here, my exit has been made around this area. Should have I kept my stop loss a little larger, I would have avoided to be stopped out a bit too early. Okay? But I just wanted to show you here in this case how the risk evolves when we take some kind of decision like banking a profit, like tightening the stop loss. Okay? Well, no questions about what you have seen today? Unfortunately, the market has not been appropriate to trade the non-farm payroll. The conditions were not fulfilled. The employment change has been good enough, but not the unemployment rate for both the CAD and the US dollar. So not a good opportunity for the non-farm with the non-farm payroll, but it was a good opportunity to illustrate the trade risk management aspect approach. And just to remind you, for the course, I'm going to open the PowerPoint I have shown, or we have used during our presentation Wednesday and last Friday. Where it is, it should be here. So just a moment. Okay, and I will go to the very last page. Oh, Richard, you say, I have learned a lot as a new Max member. Oh, thanks a lot for this comment. So I really appreciate. And so the Max Standard and the Max Primer course start next week on the 10th of November. The Max Standard course lasts for 7 sessions, 2 sessions for the Max Primer. The session number 1 and number 2 of the Max Primer and the Max Standard are the same. So this is why they are made simultaneously. And after that, after the second week, so the student having enrolled for the Max Standard course will continue with the session number 3, 4, and so on. And so you can see on the PDF a nice discount. I think, Craig, you will confirm that that aspect, the webinar special is still valid with this open house session. Is this true, Craig? Is this webinar special still valid today? I suppose, yes. Otherwise, if you have questions, you can always contact us. So you have our support email address and even our Skype. So you can ask us every question you want. Don't expect to have necessarily an answer immediately because we are living in different parts of the world. And for the support aspect, it's essentially Craig and Chris. Chris, for example, now is making his night sleep. It is the night in New Zealand. Craig lives in USA, and myself, I'm living in France. And so we have different time schedules. So, but don't hesitate. Feel free to contact us if you want specific informations. Okay. So no last questions before we wrap up this session. And you can see the trend seems to resume. So in both the pair, the pound US dollar and the pound CAD, so which will give perhaps another trade opportunity, but not good trade opportunity. Remember, the conditions were not good enough. Well, If there are no questions, so I propose to wrap up this session here. My leg is really painful, so it will be difficult for me to sustain longer this session, so I'm sorry for that, but that's life. Sometimes we have some little accident in life which change our plans. So I thank you very much for your participation today. Dom, go easy in that Maserati, patience and discipline. So I wish you a great rest of the week, a great weekend. Keep safe, keep sane also in these crazy days. And so see you in our new Max courses next Thursday. And in the meantime, take care. Bye, guys.